You've got questions, we've got answers. We have the man to answer them. Jeffrey Levine from Buckingham Wealth Partners. Jeffrey, welcome back to another episode of Ask the Hammer.
It is great to be with you as always, Bob.
Oh, so much fun. So much fun. And I understand you have some fun in your inbox.
I do. Great question comes to us from Patty, who asks, hey, I saw your video on converting traditional IRAs to Roth IRAs, and I understand now that you have to take the RMD first. My question, though, is my husband and I have no Social Security earnings, only have Social Security earnings as well as pensions and investment income, but we have no earned income. Are we still able to make these Roth conversions? And the answer for Patty is yes. There are restrictions on contributing money to a Roth IRA if you have no earnings, but those same restrictions don't apply to Roth conversions. In fact, there's really no restrictions on Roth conversions anymore. If you have an eligible account, you can convert it. It doesn't matter how old you are or how young you are. It doesn't matter how much income you make, how little income you make, what type of income it is. It doesn't matter your filing status. It does not matter. If you have an eligible account, you can convert that over to a Roth IRA.
Right. Now, when you do the conversion, that creates taxable income, which could have some downstream effects on your Social Security, for instance.
Sure does. Could have all sorts of effects. So whenever you add income to your return, you want to make sure that it's worthwhile, right? There is a trade-off here. The benefit is future tax-free distributions on not just the amount you convert, but also the growth if you follow the rules. But the payment that you have to do, right? The paying the piper, so to speak, your deal with the devil is that you have to add the income, the amount you convert, that is pre-tax dollars, to your income in the year of the conversion. And that could push you into a higher tax bracket, could phase you out of certain credits or deductions, might cause you to have to pay more surtaxes. It could make some of your capital gains that were previously tax-free subject to capital gains tax at the 15% rate or higher. So all of these things should always be looked at. And candidly, this is one area where I always suggest you reach out and work with a professional, because there's nothing like good software to help here. It's just impossible for any single individual to keep track of all the credits and deductions that can be phased out, Medicare Part B premiums that come in at different income levels, calculating income differently for different sorts of things. Software is really the best way to do this, and it will allow you to pinpoint the appropriate amount that you should be thinking about converting.
Right. And I should mention too, Jeffrey, or you should mention the need to have some cash set aside to pay for the potential taxes associated with the conversion.
Yeah. So in most instances, in fact, the overwhelming majority of instances, you want to be paying the tax for the conversion from non-retirement funds. Now, every once in a while, there's a exception to this rule. So maybe someone has spent their entire life contributing to pre-tax accounts. Now they've just retired and they've got a large pre-tax balance, but no current income. Maybe there it pays to pay for some of the tax and the conversion out of other retirement dollars. But more often than not, if you have other monies, that is bank accounts or taxable brokerage accounts like an individual or a joint account, you want to use those dollars to pay the tax on your conversion and not pay for it out of other retirement dollars, whether that's additional pre-tax IRA distributions or distributions from the Roth after you've made the conversion. In either case, generally best to pay with taxable dollars first.
I did say that we've got answers, and I think you answered them all.
Well, we appreciate it. We like questions. We definitely like answers as well. And so if you've got a question you'd like us to answer, give Bob and I a shout. Email us at askthehammer@buckinghamgroup.com. Again, that's askthehammer@buckinghamgroup.com. And Bob and I look forward to tackling your questions real soon.